Next type of life insurance is endowment life assurance policy. The insurer undertake to pay a specified sum when the insured attains a particular age or on his death, whichever is earlier. The sum is payable to his legal heirs or nominee named therein in case of death of the assured. Otherwise, the sum will be paid to the assured after a fixed period, that is till he or she attains a particular age. Thus, the endowment policy matures after a limited number of years. Annuity policy. Under this policy, the assured sum or policy money is payable after the assured attains a certain age in monthly, quarterly, half-yearly or annual installments. The premium is paid in installments over a certain period, or single premium may be paid by the assured. This is useful to those who prefer a regular income after a certain age. Children's endowment policy. This policy is taken by a person for his or her children to meet the expenses of their education or marriage. The agreement states that a certain sum will be paid by the insurer when the children attain a particular age. The premium is paid by the person entering into the contract. However, no premium will be paid if he dies before the maturity of the policy. Next is fire insurance. Fire insurance is a contract whereby the insurer, in consideration of the premium paid, undertakes to make goods any loss or damage caused by the fire during a specified period up to the amount specified in the policy. Normally, the fire insurance policy is for a period of 1 year, after which it is to be renewed from time to time. The premium may be paid either in lump sum or installments. A claim for loss by fire must satisfy the two following conditions. There must be actual loss, and fire must be accidental and non-intentional. The risk covered by a fire insurance contract is the loss resulting from fire or some other causes, and which is the proximate cause of the loss. If overheating without ignition causes damage, it will not be regarded as a free fire loss within the meaning of fire insurance, and the loss will not be recoverable from the insurer. A fire insurance contract is based on certain fundamental principles which have been discussed in general principles. The main elements of fire insurance contracts are: in fire insurance, the insured must have insurable interest in the subject matter of the insurance. Without insurable interest, the contract of insurance is void. In case of fire insurance, unlike life insurance, insurable interest must be present both at the time of the insurance and at the time of loss. For example, a person has insurable interest in the property he owns. A businessman has insurable interest in his stock, plant, machinery, and building. An agent has an insurable interest in the property of his principal. A partner has insurable interest in the property of a partnership firm, and a mortgage has insurable interest in the property which is mortgaged. Similar to the life insurance contract, the contract of fire insurance is a contract of utmost good faith, that is, unberime fidei. The insured should be truthful and honest in giving information to the insurance company regarding the subject matter of the insurance. He is duty bound to disclose accurately all facts regarding the nature of property and risks attached to it. The insurance company should also disclose the facts of the policy to the proposer. So, third one is, the contract of fire insurance is a contract of strict of indemnity. The insured can, in the event of loss, recover the actual amount of loss from the insurer. This is subject to the maximum amount for which the subject matter is insured. For example, if a person has insured his house for rupees 4 lakh, the insurer is not necessarily liable to pay that amount, although the house may have been totally destroyed by fire. but he will pay the actual loss after deducting depreciation within the maximum limit of rupees 4 lakh. The purpose of being that person should not be allowed to gain by insurance. The insurer is liable to compensate only when fire is the proximate cause of damage or loss.